and welcome to Business Morning this morning. Definitely a new trading week right here in Lagos, Nigeria. And a very big happy Father's Day to all the dads out there, going out there to get your daily 2K to take care of the family. We see you and we celebrate you today. And definitely we're going to look at what it takes to be a father, you know, in this economy later on the show. But let's kick off now. With what's happening with the oil market. Definitely, we've been tracking that and seeing that WTI and Brent did fall for the whole trading week that was last week. I think about 7 to about 9% drops last week for both contracts. And we're kicking off this week with a drop, definitely. And most investors were expecting some kind of rise, but it's been, you know, quite the volatile start to the trading week. That's for oil markets. We did hear about, you know, the Strait of Hormuz being blocked again. That was over the weekend, but the U.S. did counter that, you know, saying that no, it's not blocked. But we see the impact already kicking off the week. WTI, Brent. WTI was in the green for a short moment there, but flipped. Then we see it's 0.78% gain there for WTI. Crude Brent is firmly in the red, 1.05% lower. So that's how we're kicking off this trading week. We'll definitely see if that continues for this trading week. Is it going to be another drop this week? Who's going to rise? Will gold rise this week? Will Bitcoin rise? Will it drop? Will it fall? We'll definitely find out as the week progresses. All right, to other matters now. Let's see how the market performed last week. That's talking about the NGX. Yes, a big drop. 3.59%. That was a drop for last week. I would see the all-share index is closed at 235,000 points. Market capitalization 151 trillion. Key sectors that we track there. NGX banking dipped 10.49%. That's for the trading week last week. NGX insurance 7.22%. NGX industrial goods 4.11%, but still, year to date, we're still, you know, in green territory. That's for the NGX all-share index. But the month of June not looking so good, and this kicked off in the month of May. Yeah, May closed about 3% up. That's for the whole trading month. So I guess, you know, that's, you know, no, actually before. May. April, we had an over 20% gain. That's for the whole trading month. May was just about 3%. Then we come into June, and we're seeing sell-offs again, profit-taking. We'll see if that continues into the second half of 2026, because the first half is already winding down at this point. But this is where we are right now. It's still profit-taking. I'm sure some investors out there that joined the market only recently be wondering, what's happening? What's my portfolio going down at this point? But now you have to make a decision. Big investors say buy when the market is fearful. Some investors will say, well, I don't have any money at this point to buy, even though we're seeing sell-offs right now. So it depends on your, you know, investment appetite, your risk appetite. What are you doing with a market that's dropping? Are you buying more? And at the same time, you don't want to catch a falling knife. So you have to make that decision yourself and seek some financial advice, you know, from professionals out there to show you how to navigate this kind of market at this point. But it's still a bull market, in my opinion, at this point, even though we're seeing this correction. All right, I did talk about Father's Day. Yes, a couple of fathers were celebrated. I hope you were one of those fathers celebrated yesterday. But you know what? Let's do some analysis now. The cost of raising a family of 4, we're comparing 2015 to 2026. So the cost of fatherhood at this point. So maybe around 2015, for fuel transportation for the month, maybe you're spending about 20,000 naira. If you flip over to 2026, that's up over 400%. You're spending 100,000 and above now to fill up your tank, and maybe you're buying fuel for your generator. Therefore, electricity, that's a mixture of maintenance of your solar system. It was about 12,000 naira, you know, in 2015, that year. but now you're spending about 60,000 and above, to manage electricity in your home. Total monthly cost then, if you want to aggregate everything, maybe about 190,000 naira per month. But for 2026, the average dad has to spend about 780,000 naira. That's a 311% rise. So we've seen the cost of fatherhood there. Let's look at other expenses there. School fees, maybe two kids, was about 50,000 naira monthly cost in 2015. That has skyrocketed to about 200,000 naira, about 300% rise. That's school fees. And some of us, have about 4 kids, 5 kids, some 1, which is not bad. Food and groceries, 60K. You can spend like 60K for the month. I remember that time. My wife would go to the market, and you see the trolley is full as a supermarket, and you spend maybe like 40 to 50,000 naira. But that's different now. You're spending about 250K for this same expense in 2026, 317% higher. Healthcare is also healthcare costs has also shot up from about 15,000 naira average to about 50,000 naira. So this is what the average dad has to go through in Nigeria, taking care of the family. And this is for the low to middle income, family. We're not talking about the high-end earner. All right, let's look at the gifts now. What do you buy for your dad or your husband this Father's Day? What were people buying at this point? If you're trying to get a gift for that special dad of yours, we're looking at maybe you're buying a wristwatch, or you're buying a phone, for that dad, saying, "No, we love you, we celebrate what you do, for the family." So for gifting now, some are buying maybe a phone. Maybe you're buying him a phone, buying him a tie, whatever you're buying for that dad now. Looking at gifts there, maybe a wristwatch, 50 to 500,000 naira. If you're buying a wristwatch for that special dad, or you're buying a perfume for about 30,000 naira. That's not niche though. That's regular perfume. Maybe you take it for lunch or dinner. You're spending about 40 to 100,000 naira. Then if you're trying to look for a phone upgrade for your dad or your husband, at this point, you're spending 300,000 naira plus. So looking at what the dads go through, the average dad goes through now, taking care of the family. So I guess you choose your gift right there. And, tell that father, that man out there that we see you, we see what you have to go through to take care of the family, and we celebrate you. All right, moving on now. Let's see what's happening elsewhere. We see Nigeria's digital payment ecosystem has witnessed a rapid transformation over the past decade, driven by increasing adoption of financial technology and digital finance services. Industry stakeholders see these innovations have helped deepen financial inclusion by expanding access to financial services for underserved communities. Take a listen.
Resolution of crisis, it's an area where we still need to do some work. Our ambition far outweighs our capacity to execute. And we're seeing that in many fintechs that have gone under in the last few years. But not only just from fintech, also from regulations. If you take a look at the crypto regulation, we don't have actually. The central bank and the banks have not. SEC, I think, has gone a step ahead with the assets VASP regulations. So SEC is trying to see how stablecoins and crypto can be well managed. But from a banking point of view, I think we still don't have that regulation yet. Though Nigeria possesses, we are like number 5 or so in the world on chain analysis in terms of the volume of crypto transactions.
All right, so there you have it. So much happening around payments, around fintech in Nigeria today. We also have rules by the Central Bank of Nigeria, and we're going to get to that later on the show when it comes to data, financial data in Nigeria. All right, to our first conversation now. Yes, let's look at Nigeria's agricultural sector. It remains a critical economic growth for food security and job creation at this point. We see, agriculture still employs workers right here in Nigeria, yet access to affordable financing, that continues to be a problem for this sector, with interest rates right now still at double digits in Nigeria, even though we've seen a rate cut at some point by the MPC, but it's still a high interest environment. And definitely we also have, the Bank of Agriculture there, trying to also help out, when it comes to getting affordable credit. That's for the farmers, and, definitely that will transcend into lower food costs and hopefully lower food inflation. That's for the country. All right, let's unpack what's played out so far. We have Mr. Ayo Shoturi now, the Managing Director, Bank of Agriculture. He joins us from our Abuja studio. Great to have you, sir. Happy Father's Day at this point.
Thank
to all the men out there. Great to have you join us this morning.
Thank you very much. Pleasure to be here.
Fantastic. So, yes, we recently, the Bank of Agriculture did get recapitalized by the federal government to the tune of about 1.5 trillion naira. And, definitely we've been talking a lot about recapitalization so far for that's commercial banks at this point. But the Bank of Agriculture did get recapitalized too. So what's happened since then for the Bank of Agriculture, since the recapitalization?
Thank you very much. What has happened since I started, which is the most important thing, this administration of President Bola Ahmed Tinubu, GCFR, is a complete rehabilitation overhaul of the agricultural financing in Nigeria, starting with putting together, a roadmap, a 5-year strategic plan to actually finance about 2 million farmers, first phase, and it sort of cascades all the way. As you know, 70% of Nigerians are actually in the agriculture sector, and they make up, I think, the largest, I'd say, jobs in Nigeria. So for us, we've taken, our role as one very important to the sector, how we provide the right type of financing to the agriculture sector. It's not just cost of capital, but also access to capital, which we're trying to solve. Currently, through the Renewed Hope Smallholder Farmer Financing Program, we're financing about 2 million farmers, like I said initially. We're starting now with just under 500,000 farmers for this season. As you know, you have, different climatic conditions in different states. And we believe that, the first phase, which is first entering into the market, we will be providing financing to these farmers. When I say financing to the farmers, we're talking about input financing. Better seeds. So we brought seeds that can yield up to 5 to 10 tons per hectare, because we believe increasing productivity is the most important thing for the sector. We're also making sure that the farmers get the right blend of fertilizer. I think for the 482,000 farmers, we're distributing about 1.8 million to 1.9 million tons, 1.9 million bags of fertilizer to them, and they're comprised of, different blends of the NPKs and also urea. We also focused on providing, proper extension services to the farmers, ensuring that we move them from, our great-grandfathers' agronomic practices to using modern technology. But everything is underpinned around technology. It's a case of, how have we taken the bank from, the legacy system we used to have, and how have we digitized the entire operations of the bank to what we have currently. We've done that by, setting up core banking system. We've done all the, certifications, applications possible, onboarded on NABs and IPS. Currently, we have bank accounts for each and every farmer that can be opened in 3 to 4 or 5 minutes on the internet or in one of our bank branches. I think we have about 110 branches. We've also ensured that they just don't get cards, but they also have a wallet system where when they're redeeming the inputs, it gets debited from their wallet system overlaid on their bank account, and we're able to track from input collection all the way to harvest, through technology. So these are all the innovations that Mr. President has brought into the agriculture sector. And if you think about it, we normally would farm 5 million hectares of land across the entire country, and we barely get up to 6 million tons of food. Now, because of the improved seeds and the agronomy practices that we're helping the farmers with through extension service workers, if we're able to do 5 tons each on the average, some will do 8, some will do 9 tons, that's 25 million tons of additional food that the Bank of Agriculture will be able to, finance through the farmers. So it's about focusing on increasing productivity, not necessarily just, have you been recapitalized, what are you doing? And as you know, Mr. President didn't stop there. We also have a system where we now offtake everything every farmer produces, and I make bold to say that we have funds to offtake everything the farmer produces, because now, due to the import parity, we're now giving a guaranteed minimum price to most farmers. Farmers can tell you we're on the field now buying up all the grains they found from last harvest, where we're giving them, 350,000 naira instead of the 250, 280,000 they get in the market for maize, for example. So these are all the things that we're doing to ameliorate all the sufferings of the farmer. And we're trying to move them from, smallholder farmers to MSMEs, from MSMEs to SMEs. So we are very determined to find a way to work with, partners, both partners on ground in Nigeria and also international partners to deepen, investment in the agriculture sector and also finance it within the sector. Thank you.
Okay. So definitely, recapitalization and, what you've been doing so far to help some of these farmers. But looking at food inflation for the previous month, 16.96%. You see Adamawa State recorded the highest food inflation rate at 29.62%. So with recapitalization for the Bank of Agriculture and what you said you've done so far for some of these farmers, when will we start to see that reflect on food inflation, getting it down to about single digit? Correct.
You already feeling, the right policies and the right environment. Food inflation was 38% as of 2023 when this administration came on board.
Then
now,
after rebasing,
it's down to 17%.
We got
it will further go down because of the low interest rate that we are, giving the farmers at. Currently, MPR says 26.5%. We are borrowing many basis points below MPR. We're still doing single digits, facility to our farmers. It means that will translate across board. I just told you that we're financing 2 million farmers for phase 1 and phase 2, starting with 500,000 farmers that we've already distributed input to. We don't believe in making noise. We believe in, the results speaking for itself. Now, the most important thing is not just giving the farmers, the right input. It's also worrying about everything along the value chain. As you know, 2,000 tractors were bought from Belarus, I think about a year ago. And I can categorically tell you today that we have over 1,200 of those tractors mechanizing, land in about, I think, 22 states currently. And more is still going out. We also have plans to do large-scale commercial agriculture, with the river basins and also with the universities, because the universities have, enough land to actually have a catchment where you can do in-grow and outgrow schemes. Some of them have even water bodies. For example, Abuja University has about 14,000 hectares. ABU's area has about, I think, 23,000 hectares. So for us, we want to use that to also support the agriculture programs in the system because, as you know, it's not about just farming. It's about, thought leadership within the sector. And this is what we are trying to encourage even the universities to do, where we have, the next FMCG, moguls, Balikos of this world and boys of this world come out from, the graduates of this university, teaching them from, from the cradle. So these are sort of the things that we are looking to do. But back to your question about inflation, I'm not going to be able to tell you a figure because we can't simulate, what the results will be. But you can expect single digit inflation by end of this farming season. Farming season will probably end around September and October, and I believe we would have more than enough food, and we will be able to export using the after opportunity to our neighboring countries, focusing on intra-Africa trade before we start to look at inter-Africa trade as well.
Yeah, definitely be great to see that for the data, single-digit food inflation, and hopefully we actually feel it when we go to the market. So, but for farmers out there, watching us right now and wondering, how do I access some of the credit from the Bank of Agriculture? What would you say to them?
So What I would say to them is for them to, reach out to our branches. As I said, we have 110, bank branches across the country, giving us the closest proximity to all the farmers. But most importantly, we're not giving microcredits again to farmers, unfortunately. We've designed a new system that works, where we have, farm aggregation companies have been vetted by us. I think we put out a call for application. We received about 650 applications. We shortlisted them to just 20 of our best. And the plan is to grow, this farm aggregation companies from the ones that are tier 4 to grow them to tier 3, tier 2 to tier 1. And, the tier 1 guys become, the biggest guys in the market. And what they do for us is they aggregate these farmers based on their own, I would say, geographical spread. And they provide these input services to them, not just inputs, but also M&E, agronomy, support. And we're also building hubs across the entire country where it's a one-stop shop for every farmer. You can get, tractorization services. You can get, irrigation as a service there. You can buy your inputs there. There's going to be a Bank of Agriculture, agents there who can also help you with, payment services and banking services. Because we want to grow from not just conventional, giving farmer financing to also helping them with other things, crop index insurance, even health insurance for the farmers, because a healthy farmer, is the dream of the society. So for us, we have, many programs across board, and we're not neglecting the fact there are also some, I'd say, vulnerable within the society. We're focused on, youth programs massively. We're focused on big women program, and lastly, internally displaced persons across, the northeast part of Nigeria, where we have, the fragility in the country. So these are sort of the initiatives that we are bringing on board, amongst many others. There are so many that we would like to share with you. We're working with poultry farmers. I think we're financed about 100,000 poultry farmers. We've just done a massive, ginger revival program, starting with Kaduna, where we're giving 3,500 farmers, disease-free seeds. We're going to be aggregating about 9,000 tons from them. And we plan to take this into tissue culture labs to create disease-free ginger seeds, about 120 million seeds, because we want to move ginger production from 3 states, about 22 states in country. So for us, we prioritize, even though we're a bank, we're a development bank, we prioritize impact before, profit. So we look at, sectors that are in, in a dire strait, and we try to intervene appropriately. So it's not just about financing farmers to maximize returns, it's about creating impact and reviving a sector that gives us, the most, I would say, revenue, non-oil exports, like ginger, for example, which was the third largest non-oil export in 2023 before, the blight happened. So, we are very optimistic. We work 18-hour days to ensure that, we try to touch each and every farmer. It's not going to be easy. There's 70 million farmers in Nigeria, according to statistics by FAO and the World Bank. However, we're limited in terms of, the numbers that we can reach. So for us, we see ourselves as catalytic. We catalyze, investments. We catalyze intervention and programs in the sector, in the agriculture sector. Thank you. All
right. So thank you so much. Definitely, we hope at some point that we see all of this in the data when it comes to food inflation, and hopefully the farmers get most of these cheap credit. Thank you so much, Mr. Ayo Shotun, the MD CEO of Bank of Agriculture. This is a continuing conversation. We'll definitely have it another time. Thank you so much, sir.
Thank you. Appreciate you.
All right, so we see advocates for women's empowerment are calling for greater collaboration to unlock the full potential of women and girls across society. At the She Can conference, speakers stressed that empowering women requires the support of families, communities, and institutions, while also highlighting the need to reshape cultural narratives. Take a listen.
The belief that women can do more has brought many here. Participation is not restricted to women at this She Can conference. She Can Nigeria organizers say the movement is dedicated to empowering today's women to recognize their potential and develop their skills to achieve success. By fostering collaboration and empowerment, they aim to help women become active contributors to the society.
Entrepreneurship is not a path for the faint-hearted. It is a journey that demands imagination, courage, tenacity, tenacity, and the ability to translate dreams into tangible impact.
The perspective here is that the family also makes up a successful woman.
Honestly, there have been challenges in our marriages.
And so power couple Fela and Tara Durotoye share help tips. The job of empowering women is a continuous one that needs more hands on deck.
And Shikan should be a place where we bring in women to understand that in every area of their life they can have it all. You shouldn't just be a successful businesswoman, you should be a successful businesswoman and a family woman. You should just be an all-rounder, and that is something we try to emulate.
So this is a platform that everybody is striving on. We have a lot of youth learning today. We have a lot of collaboration also going on today. So I mean, this is what I am known for, and anything like this, of course, I will key into it. I will support as much as we can support, and I'm so proud of my darling sister Ezinne.
Also in focus for Shikan is modifying cultural narrative, empowering adolescent girls and women through career training, skills acquisition workshops, community engagement, and many more. Cut.
All right, so the federal government says it's secured Nigeria's fertilizer supply for the 2026 wet season. Early procurement decisions by the federal government have also saved the country over $42 million ahead of peak planting. Nigeria records an annual fertilizer trade surplus exceeding about $838 million. Domestically, the federal government is executing a 1.1 million metric ton fertilizer program to distribute over 22 million bags nationwide to shield farmers from global supply volatility. Definitely, we've seen what's happened with the Strait of Hormuz so far. Joining us now to unpack this, I have Dr. Armstrong Tekang, the MD/CEO of Presidential Fertilizer Initiative, and is also the MD/CEO of Ministry of Finance Incorporated. It's great to have you on the show, sir. Good morning.
Good morning. How are you doing?
I'm doing great.
It's good to be here.
Yes. Happy Father's Day. At this point, I'm having mostly men.
Thank you. Same to you.
Today. All right. So we see the Strait of Hormuz remains a major, geopolitical flashpoint, and we see Nigeria, exposed to the fertilizer value chain. What have we suffered so far with the closure? Even though we have some de-escalation right now with the Strait. But looking at our fertilizer import, we're a producer at this point, but we import fertilizer raw materials like diammonium phosphate, that's DAP, muriate of potash, that's MOP, granular ammonium sulfate, that's also called gas at this point. How have we managed, with our imports, with what's played out so far?
Thank you very much. So I think it is important to set some context here. So I'm the CEO of Ministry of Finance Incorporated, or MOFI. MOFI is the federal government company that manages federal government's investments in commercial enterprises. In other words, in businesses where federal government has shares, we have a responsibility to make sure that value is being obtained from those investments. And that is why we've invested in a number of sectors through MOFI, federal government's investment through MOFI. For instance, in the agri sector, we have the Bank of Agriculture you just listened to. We're a major shareholder where we invested to ensure that this entity is able to provide financing within that sector. We have investments in Bank of Industry, BOI, to drive the industrialization of Nigeria. We have investments in NNPC to drive our energy security. We have investments in Credit Corp to produce and to deliver consumer credit to Nigerians, Development Bank of Nigeria for financing SMEs in Nigeria. We have investments in technology companies. So one of the companies we also have a strategic investment in is called the PFI NPK Limited. And that is the fertilizer aggregation company. And the goal of that company is to ensure that we take advantage of bulk procurement, bulk purchase, with the view of negotiating government-to-government contracts that allows Nigeria to have access to fertilizer at significantly reduced prices than we would have had if individual companies went to the market to source for the same materials. The second is that we use the economies of scale through the PFI NPK that is managed by MOFI to ensure that we're negotiating better terms for bringing in the raw materials and distributing the raw materials to blenders within the country. And the blenders will in turn blend the raw materials to produce the final fertilizer product that eventually ends up with farmers. Now, as part of the directive from Mr. President, President Bola Ahmed Tinubu, GCFR, to ensure that we aggressively move towards implementing tangible, practical steps to bring about food security, clearly fertilizer is a major element of that. And what we had said was that a key part of it is to, one, have market intelligence, two, to ensure that we use that market intelligence to source raw materials at the right prices, to make sure we have sufficient supply and ensure that the materials are available on time for the farming seasons. So as part of that strategy, last year, Q4 last year, we made a decision to procure in advance fertilizer raw materials, which is the MOP, the DAP, and the gas that you just mentioned earlier, in bulk, and we're able to bring in over 500,000 metric tons of the raw materials into the country just before the escalation of hostilities in Iran and, of course, the Strait of Hormuz. What that meant was that we were able to secure the raw materials at prices that were very low prior to the increase in those prices as a result of the challenges at the Strait of Hormuz. It also meant that we're able to secure supply of fertilizer for our farmers in readiness for the current producing season. And that way, we actually ensured that we were not affected significantly by what happened in terms of increase in prices and shortage of supply through that early procurement step that we took under the directive of Mr. President to ensure that we're contributing towards food security.
All right, so looking at the procurement strategy there, that saved some money. It was $228 per metric ton. That's for gas. Before the disruptions there, moved up to about $343 per metric ton. So you were able to get the prices, before they rose. I was looking at gas, DAP, and MOP, saving $44 million. So definitely, that's great, saving money. But looking at distribution, at this point, the farmers need to get, this input. And we normally have the complaints there from the farmers. Some of them say they're not able to get it. There's middlemen inflating prices and all of that. How are we making sure it gets to the farmers, these fertilizers?
Thank you. So I need you to understand that ecosystem, the Nigerian fertilizer industry has an ecosystem where there are different parties that play different roles. At PFI, which is managed by MOFI, our job, our focus is to aggregate bulk fertilizer purchases, leveraging on our sovereign status to negotiate better terms for Nigerian farmers. So we bring in the fertilizer. Second step is we sell the raw materials at no profit to blending plants that are members of FEPSAN, which is the Fertilizer Producers and Suppliers Association of Nigeria. It's a nationwide network of accredited and approved players within that sector. That includes manufacturers, it includes blending plants, distributors, as well as other businesses within that ecosystem. The blending plants will blend the raw materials to produce the finished fertilizer products. And they would in turn distribute the fertilizer products to farmers through a number of channels. So the first one is through state governments who buy in bulk and in turn distribute the fertilizers to farmers within their respective states. And in most cases, those state governments subsidize the product that ends up with the farmer, or they even give the product for free. The second is also through a Bank of Agriculture, for instance, that will buy some of that from blenders and will put it as part of the package that it finances to farmers. The third is through agro dealers, who are retailers who buy the fertilizer products and they intend sell and retail those to the farmers. We also have other government agencies like NADF that is also involved in distributing of raw materials and inputs to farmers at significantly reduced cost and in some cases for free. Now, that ecosystem allows us to ensure that we're able to track the product from when it arrives, the raw materials, to when it is blended and finally distributed to farmers that have been verified. We also have the security agencies that work with us, as well as other key players like Federal Ministry of Agriculture and Food Security, NAFDAC, SON, as well as other regulatory agencies that work with us to ensure that we have sanctity, we have some arrangement within that ecosystem to ensure that whatever savings we're making eventually ends up with the farmers, and ensure that we are getting rid of a lot of the middlemen that create arbitrage opportunities and take advantage of those at the expense of the Nigerian farmers. And that is why we continuously work with other parties to ensure that we have that entire value chain mapped out, and every key player is working and delivering on their own mandate to ensure that when we have savings of this nature, it eventually ends up with farmers, and we are seeing that already. When we are able to ensure that there is constant, predictable supply of materials, the farmers have genuine products. Unlike what used to happen in the past, where a lot of people adulterate the fertilizer because they want to maximize profit, and we have a lot of non-genuine products in the market. We're working towards getting rid of that so that you can actually trace. We have a traceability system that you can trace the fertilizer from when the raw materials come in to when they are blended and to the point where they get distributed to farmers. That way we're securing the access of fertilizer by farmers. We're also ensuring that they're getting it at a price that is not inflated by middlemen, which is what used to happen in the past. And thirdly, we're also ensuring that the farmers are getting fertilizer not only for one season, which is typically the wet season that used to happen in the past. They can actually have fertilizer at the 3 farming seasons in a year. That way, we increase yield, we increase productivity, and we also keep those factories working. We are securing Nigerian jobs. And I also want to say very clearly that this administration under our president has given a directive that we cannot import finished fertilizer. We bring in the raw materials, blend them in country. That way, we are securing tens of thousands of jobs of those who are involved in that entire ecosystem, right up to the farmers.
All right, definitely. I hope we can help, get more sufficiency, when it comes to Nigeria fertilizer. I guess we're sufficient in, blending capacity, urea production, but we still have to sort out the import when it comes to potash, phosphate-based input. But thank you so much, Dr. Armstrong Takang, MD and CEO of Presidential Fertilizer Initiative, and also the MD CEO of Ministry of Finance Incorporated. Thank you so much for spending your day with us.
Thank you so much. I'm glad to be here.
All right, sir. Okay, so we'll take a break now. When we come back, we still have other issues to unpack when it comes to CBN's data localization rule and the right investment mix for this H2. That's next. So stay with us. And to our next conversation, as Nigeria accelerates its digital transformation, a new regulatory requirement is set to reshape the country's technology and financial services landscape. Beginning January 1st, 2027, all payment transaction data generated within Nigeria must be stored and managed locally, marking a significant shift in the nation's approach to data governance and digital sovereignty. Supporters say the move could strengthen cybersecurity, improve regulatory oversight, and unlock fresh investment in data centers and cloud infrastructure. But critics, however, warn that compliance costs could rise. Joining us for this conversation now, we have Dr. Krishnan Ranganath, who's the Chief Executive Officer, UniCloud Africa, and he joins me right here in the studio. It's great to have you in the show, sir. Good morning.
Morning.
Yeah, so yes, the CBN has been busy recently, and looking at this new circular, coming out, and we have 1st of January 2027, for most of these financial services companies to localize data gotten from, Nigeria. Talk to me about this one. Is this about sovereignty, data sovereignty? Is it about, what is this about?
I mean, of course it is about the data sovereignty, correct? Because at the end of the day, it is our data which need to reside within the country borders as per regulation. And of course, it also helps us having a better understanding of what's happening in the country. That is number one. Number two, it also improves a lot of other measures, like the cybersecurity aspects can be improved by doing this kind of movement into, rather localization. Yeah.
All right. So, before now or right now, that means most of the data for bank customers here, for some of these fintechs, most of our data is stored abroad. Or how does that work?
No. If you look at, there are two or three ways of looking at it. One, of course, all the primary banks, the tier 1 banks, majority of them still operate through data centers, so which is hosted locally. So they are more or less away from this whole new framework, what the CBN is coming up. Fintechs, the tier 3 banks or the new generation banks, of course, they may go through this data migration process, which is supposed to be completed by January next year. So that need to be, pushed into action rather. Okay, we have come up with the regulation last week, so it's an action-packed time for everybody to make it work.
All right. So what are the risks here? Looking at Nigeria, do we have enough data centers to, keep all of this data, localized for, some of these financial services, customers? Could we have issues, come January 1st, 2027?
No, I don't think so, because we have decent enough data center capacities available in the country. Couple of decent enough of international players, regional players are operating at the highest standards of tier 3, which gives you 99.996 availability per year. And every cloud provider also operate multiple locations, primary and secondary. So risk-wise, it is very minimum. That's what I could say from the industry perspective.
So, because it seems like is this enough time? January 1st, 2027, make sure all of the data, all of the, financial services customers, their data stays here. Is this enough time?
It's like,
and how much investment would it require? Because there's also the talk about increasing costs for most of these, fintech companies.
Cost may not increase. Honestly, cost may not increase. That is first. I can say that much. Cost may not increase. But, there's a saying, when there's a will, there's a way. If that is a regulator wants, if we need to make it happen, let's work towards it. That's what it is. Okay, there's a deadline. We understand it. Everybody understands it now. It is written, correct? It is written, stamped. We know the deadline. Instead of going around it, let's make sure that, we work towards it to make it work. Okay, then maybe we can say 80% of the data is moved, 80% of the companies are falling under this regulation, we are signed off, 20% is remaining, we need an excess time. Then the companies can go back to CBN and request for an extension, potentially, correct? So that is possible, but without starting the project, we can't say that is that enough or not.
So we start the process first, then we understand what we're dealing with.
Exactly.
Yeah, when it comes to localizing all of that data. Fantastic. We'll definitely keep tracking this one, and it's an ongoing conversation. Thank you so much. I'm Dr. Krishnan Ranganath, Chief Executive Officer of UniCloud Africa. Thank you so much for coming to us this morning. Thank you, sir.
Thanks a lot. Thank you.
All right. We'll take a quick moment now. When we come back, we look for cues when it comes to investments in the country. What next? That's in a moment. To stay with us. So it's a new trading week, and definitely a lot has played out so far in this trading month of June. But let's look at portfolio construction for Nigerian investors right now. And joining me for this conversation, we have Taufik Subair, Senior Investment Research Analyst, Pathway Asset Management. Good to have you on the show. Good morning.
Good morning.
Yeah, so it's another week, another dollar, another naira, at this point. What do you think makes a resilient portfolio? Right now, I'm already getting complaints from some investors now saying, I just got into the market and it's dropping right now, talking about the NGX.
Yeah, so looking at what has happened in June so far, we have seen retracement in asset prices. And that takes me to your question about what does it take to construct a resilient portfolio? So whenever you want to allocate your capital, you need to look out for some certain parameters. Like you need to check some certain boxes. You want to know this portfolio I'm building, how prone is it to inflation? Is it going to be defensive when it comes to inflation? You need to check that. How is it going to react in a high interest and low interest environment? You need to also tick that box. So by the time you answer all of those questions, you will be able to come up with some certain investment selection that is going to make you to look that is going to be very supportive to you in a down market like this. Because imagine you deploy your fund in a fundamentally sound stocks. Those stocks, they can be trading lower intraday, but by the time the market closes, they go back to the previous day price, meaning your capital is going to be preserved regardless of whatever the events looks at in the market. And by the time the market move into the positive side, you are going to rebound and start making profits.
Right.
That's what it takes to build a resilient portfolio that can withstand volatility.
Right, and definitely, you know, we celebrated Father's Day, and we have a lot of fathers out there, you know, trying to turn 1 naira into 2 naira or into 10 naira, you know, to take care of the family. And definitely, they have to make that investment decision, you know, at this point. What for you is the best diversification plan? You know, so that our dads can keep making profits?
So when it comes to diversification, I don't see investment in isolation. So I believe whenever you want to invest your money, you need to tie it to an objective. So that objective is what is going to shape the way you invest those funds across asset classes. So when you pay attention to your investment objective, that's going to help you to come up with the best selection. So in terms of diversification now, you need to look at your liquidity need. So what we do as a business in Pathway Asset Management, when we want to onboard our clients, we allow them to go through some certain procedures. We want to know what their objectives look like. So that will help us to know how to match their assets to the liquidity need, such that we don't invest short-term fund in what's it called, in equity, for instance. That imagine you deploy some fund in equity at this time and you need to make your use of your money any time. So it means you are going to be booking some certain loss. So going through that procedure make us to know the best asset class that works for them as an individual, and that helps us to balance out and diversify their investments across several asset classes. Right,
and looking at percentage at this point, if you're trying to allocate your investment, how much percentage should go to fixed income? How much should go to equities? How much should go to risk assets like cryptocurrency?
So when it comes to what's it called, the allocation now, right? So the way I look at it, I believe is not going to be, it can be relative across individual. But if I want to categorize this into 2 categories of individual, so I'm going to say on the one side, I will look at those people that are conservative, and on this other side, I will look at those people that are aggressive. So if you are conservative, you want to put your money in fixed income space, like maybe like 70% in fixed income, while you do risk assets 30%. But if you are aggressive, then you need to go long in equity, because that's the only way you can actually build sustainable wealth over time, because you are investing in businesses, you need to understand. And in as much as those businesses continue to exist, they are going to create value over time, and that is going to, what's it called, give you a decent return in the long run. So imagine you want to build a portfolio and you want to tie it to an objective of maybe your retirement plan. So it means you are not saving for the short term. So you are going long. That will enable you to know that whatever the market is doing now is not your business. It is even giving you more opportunity to buy more cheaper. So it shapes the way you look at the market, in as much as you can identify your objective for investing.
Right. All right, dads. Tie your investment to something. Plan for retirement, because that time will definitely come where you can't work.
Definitely.
So use what you've made, you know, so far. And those investments, hopefully they can keep you going.
Very well.
For the days you're not working. Thank you so much, Taufik Subair, Senior Investment Research Analyst, Pathway Asset Management. Thank you for coming on today.
Thank you for having me.
All right, global now. All right, for the global economy, expectations for this week, that was Monday, European consumer confidence. We also have ECB President Lagarde. She's going to be speaking today. For Tuesday, German flash manufacturing PMI. Wednesday, U.S. crude oil inventories, U.S. bank stress test results, BOJ core CPI, and Thursday we have the U.S. personal consumption expenditure inflation for May 2026, weekly jobless claims, Australian unemployment rate. Then for Friday, U.S. goods trade balance. That's data from the U.S. So that's what we're expecting this week. Then we also have that big news there for Keir Starmer stepping down. Definitely, we're seeing a lot of pressure on the PM right there, and definitely we're seeing how much UK politics has switched so far. Most of the time, we see the prime ministers, they're not staying as long as they expected. So we have the latest one. Definitely will bring you up to speed on what's played out so far and what to expect later on. That's it for the global economy. All right, that's Business Morning this morning. Thank you so much for watching. We'll bring you more updates at 1:30 for Business Incorporated. We'll see which market's going up and which one's coming down at this point. Thanks for watching. I'm Ladi Williams from here, the team right here at Channels HQs. Bye for now.